I've been a trader since 1987. Today, I have a total of 7 strategies running on Alpaca Live. Past Wednesday, a week ago, some of the algos made the most money they've ever made. And I like to point out a very valuable feature of algocloud and SQX. I think the most valuable thing for traders to pay attention to is the market regime. I like the robustness testing. That's a very critical part of the overall process.
Hello, everyone.
Hello.
Hello, in our podcast about algo trading, which is part of current Stock Lab course, which is going. And it's my pleasure to introduce today Christos, who is a professional trader for many years, have a very interesting path of a trader, and he's successful trader. So there will be a lot of insights. For example, right now, as we are recording interview, there is high volatility in market due to situation in United States and Mr. Trump steps. And Christos will touch how he's dealing with it and basically how he's successfully dealing. So again, hello everyone. Hello, Christos. Thank you for joining us today, and and please tell us something about you.
You're very welcome, Cornel. It's a pleasure of mine to meet you online and discuss some of the approaches and successes I had with AlgoCloud. I've been a trader since 1987. I started my trading journey just doing simple stock trades back then. And then I transitioned to full time trading in 2000. In 2000, I started exploring some automation for executing trades, but I concentrated mostly on index products such as the the S&P 500 via the SPY ETF, and later I transitioned to the ES futures. But I was always interested in doing stock trading uh, automatically, but I never seemed to find the proper tools, the proper software tools to first of all do the data exploration, the data mining, and then to transition whatever strategies I was coming up with onto a specific platform. About 14 months ago, I came across SQX and Algo Cloud, and I immediately realized this is a very powerful tool, and it was what I was looking for. Um, I like the fact that the tool is highly integrated. I like the fact that there's a data uh, subsection in the tool that handles the data, that you can quickly formulate a strategy with some simple code. And also, I love the fact that it executes the backtesting with amazing speed. Um, I After coming across the tool 14 months ago, I started implementing a number of strategies which I thought would be successful given my experience from the discretionary part of my trading. And today I have a total of 7 strategies running on Alpaca Live. And I will go now into details of what I have on Alpaca Live running to give a sense of the blend of the combination of the strategies that I have, uh, which incidentally have low correlation among each other. I think they less than zero point 0.4 correlation
Mhm.
to each other. Uh, I will start with the first strategy that has helped me in this high volatility environment. It's a gap strategy based on the Russell 3000,
Mhm.
and basically looks for uh, volatile conditions in the market, and specifically when the market opens with a specific gap. And then from that, it has a special um, ranking function, which determines which of the universe of the 3,000 stocks in the Russell 3000 are the most promising to enter a long position. Incidentally, all my strategies are long only
Mm-hmm.
strategies. So this particular one, the Gap Russell 3000, has been very valuable in this high volatility environment because for the last month, the market tends to open, the real-time trading hours tend to open with a gap. In addition to this particular strategy, I have a seasonal strategy which operates on the S&P 500.
Mm-hmm.
And I like to point out a very valuable feature of algocloud and SQX, the fact that you can create your own stock group.
Mm-hmm.
So what I have done is I've looked for strong seasonal patterns at specific dates, uh, let's say between from the middle of one month to the middle of the next month. And then you can create a universe that just contains those names. And then you can apply a mean reversion or trend following or breakout strategy on this refined universe of stocks.
Mm-hmm.
This has been a very successful approach, and I think it's valuable the fact that SQX and Algo Cloud gives you that capability. So instead of operating on the Russell 3000, Nasdaq 100, S&P 500 universe, you can actually define your own universe that the strategy will operate in.
Mm-hmm.
Of course, with the ranking function and so forth, but it's an approach that I found to be valuable. Uh, I have another approach, which is a combination of momentum and seasonal, and operates on the S&P 500. And this particular strategy also takes advantage of the fact that in the Algo cloud, you can define secondary time series. So when you're doing stock picking, you can define SPY as your second time series. And if the SPY itself behaves in a particular way, then it allows the strategy to enter different positions. Uh, by the way, I think the most valuable thing for traders to pay attention to is the market regime.
Mm-hmm.
Whether we're in a trending up market, trending down market, we're in a low volatility environment or high volatility environment. In fact, quite a few of my strategies shut down in a high volatility environment.
Mm-hmm.
Uh, Now, how do I measure volatility? Alpaca doesn't give me the option of accessing the VIX. So what I've done is I use a function within the Algo cloud. So the function is called variance, and what I do is I compare the variance historically. So I look how the variance is behaving presently versus the past, and if certain conditions are met, the some of the strategies completely shut down.
Mm-hmm.
Another strategy I have looks at the breakout universe in the Russell 3000 uh, collection of stocks. Uh, so this one it's strictly a breakout strategy that attempts to reduce the drawdown. Drawdown is always a concern. Return to drawdown is always desirable to be as high as possible.
Mm-hmm.
Another strategy I have is a mean reversion that operates on Nasdaq 100. I noticed that Nasdaq 100 stocks tend to be strongly mean reverting, potentially because a lot of money managers are looking for opportunities to get into one of those Nasdaq 100 stocks. But also, this particular strategy is paying attention to what's happening in the overall market. We don't want to enter when obviously the market is in a free fall. So I'm looking also what's going on with the SPY ETF. Uh, Another strategy I have is a continuation strategy in the Russell 3000. This is a very short-term oriented strategy. It takes position after it sees a small return to particular value, and then with the expectation that the next day we'll see some corrective action to the upside.
Mm-hmm.
So it's a strategy that tries to capitalize on momentary backtracking of a stock price.
Mm-hmm.
And finally, have a very classic mean reversion strategy that operates on the S&P 500. And there I use again the market regime filter. So all in all, I have presently 7 live strategies running on Alpaca Live with quite good results. Some of them have completely shut down. They're not taking positions anymore. In addition to these 7 live strategies on Alpaca Live, I have 59 strategies running on Alpaca Paper. These
Mm-hmm.
now are going through an evaluation phase. And from those 59 strategies, the 5 are operating in a stock picker mode, and 54 they operate in a single asset mode. And one of the reasons I'm doing the single asset is because there is a strong interest from an institutional client to evaluate how these strategies perform on specific assets. Though those specific assets are selected based on macro themes. So that's how they operate, and I'm trying to accommodate them using the single asset approach. Now, would you like to to ask me anything, Cordell? I don't want to monopolize.
I didn't want to interrupt you because you are sharing such valuable insight. I didn't expect that you'll go deeply and openly in
Yes,
that way
I like to.
to discuss what you are actually running, because it's many times it's just secret. It's like secret sauce to
I know.
traders, and so I don't want to
Yeah.
interrupt you and just continue.
I think sometimes traders are overly protective.
Okay.
It's you know the big challenge. The big challenge is how much capital to allocate and how to control risk
Mm-hmm.
based on the assets volatility. I think that's where the real secret is, and how to combine all these strategies in a portfolio.
Mm-hmm.
That's where I think the essence, that the challenge is how to combine the strategy in the portfolio and what capital to allocate on a per strategy basis.
Mm-hmm.
More or less, people know how to do a mean reversion or a breakout strategy. The information is out there. In fact, I will mention the books that help me, the
Mm-hmm.
sources that help me do some of these strategies. In fact, I'll do it right now. I have to say that I got a lot of inspiration from Ali Case's YouTube channel. I think he's putting out valuable content, and if people pay attention to the content, they can come up and using, of course, the algocloud and the SQX tool, they definitely can come up with money making strategies.
Mm-hmm.
But in addition to inspiration from Ali Case's YouTube channel, I have an extensive book library, and over the years, I keep referring to this library. And in fact, those books are valuable in the sense that were published a long time ago, and a lot of the strategies effectively are out of sample right now, and it's very instructive
Mm-hmm.
to see how these strategies are performing using, of course, a state-of-the-art tool such as SQX.
And may I ask you,
So
can you recommend, for example, some book? I also
I
want to
have them
go
right
out.
here. I've
Yeah,
written
okay.
them.
Okay.
I I I have a book called Trade Like a Hedge Fund by James Altucher.
Mm-hmm.
It's a small book. I don't know if it's out of print, but I think people can easily find it on the internet. Uh, the other book I like very much is In the Trading Cockpit by Gil Morales.
Mm-hmm.
Gil Morales was the right hand of O'Neill, so who was a famous investor
Mm-hmm.
and money manager. Another book is the Algo Handbook, also by Gil Morales. And of course, the old time classic, The Long Term Secrets into Short Term Trading by Larry Williams.
Yeah.
Uh, Larry Williams, a very famous commodities trader, and he has published many books and he also has a lot of YouTube videos. I think if people go through these sources for ideas and mix their own preferences for uh, risk tolerance and also from their own trading experience, they definitely can come up with successful strategies.
Hmm.
And what I like is that within SQX and AlgoCloud, you can very quickly prototype a strategy.
Hmm.
I have to give you an idea. My Gab Russell 3000 strategy has 3 lines of code. It's just
That's,
3 lines of code. People
that's,
don't realize how useful the ranking function is. The
hmm.
ranking function goes through 3,000 stocks, and of course, if your conditions are met, the ranking function has to do the last filtering. But essentially, the combination of the code in the main body of the logic, and then with the addition of the ranking function, it's a very powerful combination. So this covers my sources for ideas.
Yeah.
Now I've put together here what my uh, what I like about SQX Algo Cloud. I like the fact that it's one-step solution. You don't have to run around, use one software package to do the downloading, another software package to run the back testing, yet another one to do the handshake between the broker and your code,
Hmm.
uh, and so forth. So it's a one-stop solution. Uh, it's how easy you can code an idea. Uh, you don't need extravagant programming capabilities. You can express an idea very quickly, and I think I found most of the functions that I was looking for embedded in the SQX. In fact,
Hmm.
uh, I haven't had difficulty with the functions provided. I've done all the work with the functions provided within the SQX and the Algo Cloud. I like the robustness testing. That's very critical part of the overall process. You want to see if your strategy falls apart, if some of the conditions are perturbed in a specific way. You want to see if you operate in a stable area of your input parameters. Um, I'm always amazed how fast the backtesting is. I'm truly amazed by that.
When we started to
Um,
create stock picking, it was like maybe 10 minutes, the backtest. It took about 10 programmers did many like optimizations, and finally they did it in the way that it's quite fast. But yeah, please continue, and maybe later we
the,
can discuss a bit more about your approach and your view on robustness, little bit.
sure. Uh, in fact, the fast backtesting was a critical factor in using this data mining
Hmm.
software. Back in the old days, it used to take hours and hours. I would put something to be backtested and then go out
I know. Yeah.
shopping or whatever for 3 hours and then come back and still wonder if it's still doing what it's supposed to be doing and so
Yeah.
forth.
I know. Yeah.
Um, I like the portfolio part of the software package where you can put all your strategies together and then see how the overall portfolio is performing. That's very valuable information there. Um, the ease of placing strategies is unbelievable to me that you can have an Alpaca account, use the Algo Cloud editor, and then just push a button and follow a very quick process, and there you are. You're there. I was amazed the first time it happened, and when I got the first reports that the trades were going through, I was very happy about that. And that's true not only for the live but also for the paper accounts. And I like also the way now AlgoCloud reports on the results, the performance results. You can, if you have like a number of strategies, you can get the report on a per strategy basis, or you can
Mm-hmm.
get the overall report on a
Yeah.
portfolio basis. And I don't know how would people do it otherwise. Downloading the data in some Excel spreadsheet and then fight with Excel and so forth. I think that's very valuable tool to have, the immediate reporting of your equity curve.
Mm-hmm.
And of course, I mentioned the construction of the custom stock groups. That you can do custom stock groups in SQX, and they can do
Mm-hmm.
the same on AlgoCloud. So that's basically the overall approaches that I'm using, and where I stand in terms of the strategies running now on Alpaca.
Yeah. Thank you. Thank you for this all the knowledge and also sharing the points you meant. You meant what you like. It's yeah. We've been also. I. It's worth to say that you are a real long time with us, and you are already kind of part of us team because you helped us to do a lot of work to handle all the unexpected issues correctly and etc. So it's finally easy, but there is a lot of hidden behind, and luckily we've been able to go through this way, and now we are sure that it's in the phase that basically it can be used. Many complex things can be used by just pushing the button, and we are glad that we were able to finally to reach this phase. And may I ask you, Christos, you meant robustness testing, do you like, and also you meant the Ali Casey videos. And may I ask you maybe just in few points, can you tell how you look at strategy, if it's robust, what is sign of robustness for a strategy, and maybe when a strategy is stopping working, you have any checklist of any process how to evaluate that strategy simply should not be run anymore.
Yeah, basically, I do the Monte Carlo simulations.
Mm-hmm.
I Before I even enter the Monte Carlo simulations, I actually manually vary the parameters to get an
Mm-hmm.
initial feel. Because a strategy that does not work, it shows up, actually collapses with a small perturbation of the input values.
Mm-hmm.
So that's before I enter, the Monte Carlo simulations, I do the manual checking. Now, if it passes through the manual checking, I go through the process that is provided on the SQX, and I look for return to drawdown. I look for the profit factor, profitability, all these parameters. I'm
Mm-hmm.
looking to see how vulnerable they are to the perturbation of the input values. I find particularly useful the 3D mapping
Mm-hmm.
to give you a very quick look how stable your parameters are, how stable the strategy is.
Mm-hmm.
Now, most of the strategies I use, I would say 95% of them are very simple strategies. Therefore, I don't have a multi-parameter state space in order to avoid overfitting. So the process of checking for robustness is fairly quick because I don't have a multitude of input parameters to vary. So basically that's what I do. There is a manual phase, and then there's the utilizing the tools embedded robustness testing. And now I've done a lot of robustness testing also on single asset strategies. These single asset strategies, if the assets are mildly correlated, they should show the same behavior. So it's an indirect way to determine the robustness. Like for example, if you have an asset which belongs in the oil exploration field, and it shows, and you have a strategy that shows profitability on ExxonMobil, but does not show profitability on some other petroleum company, then there is
Hmm.
obviously something wrong with the strategy.
Understand.
Also, the strategy for ExxonMobil, if some variation of the parameters causes maybe another petroleum company to become profitable, then that's also a red flag. So I'm looking in different ways to see how robust the strategies are. So that's basically my approach when it comes to robustness.
Understand. And how do you deal with the turning off strategies? Because some of them can maybe run forever, but obviously might happen that strategy stop work. And what is your view on this topic or your experience?
I first test all the strategies with a 25-year horizon. I want to see how well they're performing throughout different market regimes. So basically, of course, I do some walk forward testing and out of sample testing, but essentially, I don't break down the ahead of testing the periods, the time periods. Instead, I'm relying mostly on this secondary time series I talked about before,
Hmm.
whereby every strategy that picks from the Russell 3000 or the S&P 500 universe or the Nasdaq 100 universe is looking simultaneously at what's happening in the overall market. Like if
Hmm.
it's a Nasdaq 100 strategy, I'm looking at what's happening with the QQQ and also the volatility of the QQQ. If it's dealing with the S&P 500 universe, I look what's happening with the trend and the volatility of the SPY ETF.
Hmm.
So basically, um, I don't aspire too much into going and selectively turning on and off strategies depending upon whether they show profitability or breaking apart
Hmm.
easily. If I see some strategy giving me, from back testing, I have some strategies that may give me 2 consecutive months of losses in the back testing. Well, if I see the same strategy showing 4 months of losses under live conditions, then obviously something is happening there.
Hmm.
But I'm very reluctant to turn off a particular strategy just because it's showing a couple months of losses. So that's what I'm doing. I'm relying mostly on having a secondary time series based on the SPY or the QQQ and determining from there what kind of market regime we're in. And I'm relying on that to either enable or disable the execution of the strategy.
Thank you. Thank you for explanation. It's very interesting that you are very stick to and checking this market, those indexes and regimes. You meant it
Right.
many times during the interview that basically first is regime, and then if regime is fine, then the strategy is trading. It's important because many traders just develop the strategy and maybe added some trend filter, but overall not care too much about the regime. And as we are pointing, it's very important to simply to let strategy to operate in the say, friendly or environment which it was the strategy was created for.
Right. Exactly.
Yeah,
Exactly.
great.
I'm
Yeah, let's continue.
I'm exploring now a set of strategies that operate only on an extreme low volatility environment, and they
Hmm.
show a lot of promise. So those strategies are inappropriate for the current environment. But one potential area for someone to look into is, let's say, out of the Russell 3000 universe, to actually focus on stocks that have extremely low volatility,
Hmm.
because the results, they may not be spectacular in terms of profitability, in terms of return on capital, but they're very stable results. You can come up with a large Sharpe ratio, and
Hmm.
also a large profit to drawdown ratio.
Hmm. Hmm.
So I think it's important to focus on this regime aspect of designing your own algorithm.
Thank you. And also, as you are speaking about regime, when you compose portfolio, you are running to like 7 algos. Was it composed to cover different phases of the portfolio composition was to cover different phases? So basically, it kind of simply if the strategy operate, let's simplify it, like closes below and below or up or up to 200, moving average 200. So let's use this simple filter, closes below or up. And then in portfolio, you would add two strategies basically, and one would operate if the condition is true, and second if false. And this is the way you are looking on portfolio creation. Yeah.
Yes, because your profit targets and the stop loss and so forth are greatly determined by the volatility.
Mm-hmm.
And you have basically the following challenge: either not to be active in a very volatile environment, uh, and or be active in a high volatility environment, knowing ahead that it's a riskier environment, but also the opportunities are greater. For example, this past Wednesday, a week ago, some of the algos made the most money they ever made because because the market went up 10%, but they had to withstand the
Mm-hmm.
deep the deep dive of the market. So those were taken into consideration that they're operating in a high volatility environment. So the allocated capital was smaller, and
Mm-hmm.
the provision for the stop loss setting was very generous to be able to handle this type of market. But as I said before, uh, most of the strategies deploy this filtering within themselves, but some strategies also they have their provision for a high volatility environment.
Mm-hmm.
So, so basically, if a developer or trader approaches the market as a risky affair, so to speak,
Mm-hmm.
if it focuses first on the risk and then on the profit, they'll be ahead of the curve.
Yeah, understand. Yeah, so I'm glad that maybe, or let's say, if you would like to share anything more with the traders, then maybe it's right time now. Or if not, then I think we covered kind of a whole process from the creating strategies to gathering some know-how, composing portfolio, and also tools you are using and robustness approach. So I think it's like a whole package which trader needs to start and can get a lot of inspiration from it. But if you like to share anything more with the traders, let's tell it.
I like to share also the psychological aspect of this,
Okay.
of developing algorithms. It's easy to get discouraged in the beginning.
Mm-hmm.
I have to, because of my electrical engineering background, one of the most valuable metrics in communication is called signal to noise ratio. That is how prevailing is the signal versus how much noise there is in the channel.
Mm-hmm.
And markets are incredibly noisy, incredibly chaotic. So it's easy for someone started exploring the developing algorithms. It's easy to get discouraged.
Mm-hmm.
But it's something that they can be ameliorated by looking at sources for trading ideas. And basically, they can start putting together some very simple ideas. As I mentioned, there are some sources that they can get some initial ideas, and they can do some modeling with SQX and algocloud
Mm-hmm.
and see where that gets them. And the challenge is there if you come up with a simple strategy is that occasionally the market will go into this. If you're dealing with a long only strategy, the challenge is to take care of the times when the market takes a deep dive. Uh,
Mm-hmm.
and that's what throws most of the strategies off. So there are two ways to handle that. Either you actually put switches in your strategy that will completely shut off,
Mm-hmm.
or you include in your portfolio some reverse ETF, like SQQQ, for example.
Mm-hmm.
You make it that part of your portfolio. And when the markets go in a deep drawdown, uh, your portfolio, if it deploys some hedging mechanism, such as the SQQQ, will even out these points in time where the equity curve takes a dive. Of course, that comes at the expense of the profitability. So that's something that you need
Mm-hmm.
to design up front. That's why I said before that coming up with how you combine all these strategies into a portfolio, that's the real challenge.
Mm-hmm.
So one of the questions is, do you include some strategies that actually make money when the market goes down? And the answer is yes, you should include some strategies that make money
Mm-hmm.
when the market's going down. Markets have a long-term upward trend. There's an upward bias, but it's worth to consider some strategies that also make money in a downturn.
Understand. Yeah. Thank you for this note, for this point, because yeah, there are periods when it's easy to make money, but obviously there are periods like now, and then you really see what you have in portfolio and if it can survive or not.
Yeah, there is a third way, Cornell. The third way is to actually trade assets that are not highly correlated.
Mm-hmm.
You can have gold and oil and silver and other ETFs, for example, that deal with these asset classes, which are also part of the alpaca universe. And I'm actually exploring now this into having a portfolio of just ETFs
Mm-hmm.
that includes both long only ETFs and short only ETFs and blend them together to even out the equity curve.
Mm-hmm.
This is part of my ongoing investigation right now.
Mm-hmm.
Because it's so easy. Like, within the Alpaca platform, you can just call out the appropriate ETF, and you don't have to run around and go to different platforms. It's all there. It's all there. It's just a matter how what assets you choose, non-correlated assets. Also come up with a collection of non-correlated strategies on a per asset basis,
Mm-hmm.
and then combine all these strategies in such a way and allocate the appropriate amount of capital that will yield the optimum equity curve. It's It's a long process. It's not an easy process. It takes time. But like I said, SQX quickly can give you results, and that's a big plus. Big plus.
Yeah, it's great. You also shared some your current work and current uh, way of thinking and what you are exploring, and
Yeah.
it can be also inspired for the listener of this podcast. What
Yes.
areas they can explore too, and maybe even they will share with us some interesting points and can get inspired each other. So I think
Right.
it was great time, Christos, and thank you very much.
Likewise, I
Thank you
enjoy
very
very
much for
much talking
sharing
with you.
all this knowledge. It was you really well prepared for the interview and covered it like made like package. I believe that every trader who is starting and considering should watch it and get a lot of inspiration on any step of the on any part of the way he is already right now and get something for him. So thank you very much, and hopefully
You're very
next
welcome.
time.
Very welcome. Always a pleasure to see you.